In this video, we tackle the three highest paying dividend stocks in Canada. The dividend yield is not the only filter that I considered here, but a string of different ratios and numbers, such as the historical growth of the dividends, payout ratios, and the PE ratio. First, let's define what is a payout ratio. For example, the company recorded $5 worth of earnings per share and pays about $2.50 per share as dividends, then the payout ratio is 50%. What is deemed as healthy payout ratio may vary from industry to industry, but in general, less than 50% is healthy. Anything more than 50% may seem unsustainable because then it means that the company pays a huge part of its earnings to its shareholders and does not retain much for its internal usage to grow the company. And if you watch until the end of this video, I will show you a calculation of the future value of your investments with dividends reinvested on all of these three companies. Now, with all of that out of the way, here are the top three highest paying dividend stocks in Canada. The first in our list is the Bank of Nova Scotia. This is currently selling or trading at 79.93 Canadian dollars per share with beta of 0.85. Therefore, the beta means that this stock is not as volatile as compared to the stock market on average. The shareholders of Bank of Nova Scotia are not sticky fingers nor trigger happy as compared to the rest of the stock market. This is the historical dividend payouts of Bank of Nova Scotia from 2007 until 2021. So right now, this is only until the first half of the year as we are only in August. Now, what you will notice right off the bat is that the company has got choppy dividends. What you will see here is from 2007, it was at 1.71 and then 2.72. And the highest so far is back last year, which is sitting at 2.86. The 10-year growth rate of the company on their dividend sits at 5.6%, and 5.6% is not a bad thing. As a matter of fact, this is certainly a good thing. Now, one factor that I wanted you to have your attention on is that the payout ratio of the company sits at 57.1%. Thereby, this means that about 43% of the company's earnings are essentially retained by the company to grow its operations and business. And as we mentioned a while ago, during the beginning of this video, that 50% and less essentially is what considered as a healthy payout ratio. Now with BNS, it's at 57%. Here, let us focus on the timeline of the history of the dividend pays of BNS from 2012 until 2020. What you will find here, as I mentioned a while ago, is that there is a bit of choppiness. We want to see the direct correlation of the dividends to the earnings per share of the company and see if there is an actual dips and drops and highs and lows in the earnings per share as well. This is the earnings per share of BNS from 2012 until 2021, at least this first half of 2021. What you will find here is that in 2012, the earnings per share was recorded at 4.12, and then there was a drop in 2013 and then growth until 2016. And this somehow is a direct correlation on the dividend payouts. If you will look here as well, so there was a recorded dividend pay in 2012 at 1.78 and then a drop in 2013 and then continuous growth until 2015 and then drop in 2016 here on the earnings per share of the company. So that's until 2016. The PE ratio of the Bank of Nova Scotia sits at 12.88 during the recording of this video. With a history of a choppy dividend pay from 2007 until 2020 and a payout ratio of quite high, 57.1%, I would say that the Bank of Nova Scotia does pose a certain risk or a higher risk as compared to an average Canadian bank. The second company of our list of the highest paying dividend stocks in Canada is the Royal Bank of Canada. This currently trades at 131.72 Canadian dollars a share with a beta of 0.80. This is the historical record of the Royal Bank of Canada's dividend payouts to its shareholders from 2007 until 2020. You will find that in 2010 until 2011, the company grew its dividends, and this has been the trajectory of this company until 2020. There is absolutely more sustainability and consistency on the dividends of this company as compared to the Bank of Nova Scotia. And then in 2015, they breached the $3 per share. And then in 2019, they breached the $4 per share. Last year, it was recorded at $4.29 per share, and there has been so much increase here. If you will find in 2019, they had an 8% increase, and then in 2020, they had a 5.4% increase as compared to 2019. Now, the payout ratio of the company sits at 43.9%. Therefore, the company keeps about 56% of its earnings to grow and sustain the companies, not necessarily just sustain, but to grow the company in itself. The 10-year growth rate of the company is recorded at 7.2%, and this is a good number, 7.2%. This is the earnings per share record of the company, the Royal Bank of Canada, from 2012 until 2021, first half of 2021. And we saw consistent, sustainable growth of the dividend payouts of the Royal Bank of Canada in the last 10 years. And this is exactly what we want to see as well when it comes to their earnings per share. And let me just give you a quick run about on why we want to see the same consistency here, because if the earnings per share is not growing but the dividends is growing, that is a questionable trajectory. What we want to see is that the earnings per share grows together with the dividend payouts of the company. From 2012 until 2020, what you will find here is just consistency on the growth of the company's earnings per share. And now we are sitting in 2020, and they're still sitting at about $6 a share. But in 2021, this is something that we have to look out for if they're able to breach the $7 per share. Nevertheless, the company is recording or has recorded consistency on the growth of the earnings per share and the dividend payouts. The current PE ratio of Royal Bank of Canada sits at 13.38. This is higher than the Bank of Nova Scotia, but looking at the dividend payouts together with the earnings per share, the Royal Bank of Canada seems to be more sustainable and more consistent. The third company in our list of the highest paying dividend stocks in Canada is the Bank of Montreal with ticker BMO. This currently trades at 127 Canadian dollars per share, or 127.91 to be very exact, during the recording of this video. Here, the beta of the company sits at 1.19. The beta then means that this company is a little bit more choppy or a little bit more volatile as compared to the rest of the stock market. Amongst the three companies, Bank of Montreal is the most volatile, and the PE ratio as well is the highest at 14.05. Therefore, it means that the company's stock price is trading 14.05 higher than its earnings. This is the historical dividend payouts of the Bank of Montreal from 2009 or 2007 until 2020. Let's have again another 10-year look on the performance on the dividend pays of this company. And what you will find here is that it is consistent as well. This is much more consistent than the Bank of Nova Scotia. Amongst the three, really the Bank of Nova Scotia is the most choppy one. And then the Bank of Montreal is the next more consistent, and the most consistent is the Royal Bank of Canada. Anyhow, going back to the insight for the Bank of Montreal, in 2010, they recorded 2.23 dividends per share, and then that grew quite slowly until 2018 when they breached the the $3 per share. And back last year, they are still sitting at around $3.37 per share. Yes, this is slower growth than compared to Royal Bank of Canada. Nevertheless, this is an trajectory of growth and not a choppy one. The Bank of Montreal pays out 46.5% of its earnings to its shareholders, and therefore this is absolutely healthy. This is the second highest one. The first one is a BNS, wherein they pay out more than 50% of these earnings to its shareholders, and the second one is BMO, wherein they pay 46.5% of their earnings to the shareholders, and the third one is the Royal Bank of Canada, which has the least payout ratio amongst these three. The 10-year growth rate of the company's dividends in the last decade is at 4.2%, and this is also a good number. Now, what I find truly interesting with the Bank of Montreal is that they have got the highest recorded earnings per share amongst these three companies. From 2012 until 2013, they recorded over $4 worth of earnings per share. And then in 2014 until 2016, they breached that $5 per share. And then in 2017, they have recorded over $6 per share worth of earnings. Now, as you can imagine here, and as we have seen in our previous companies, the Bank of Montreal recorded the highest earnings per share here, but they don't necessarily record the highest dividends per share. This therefore means that when it comes to earnings per share and dividend payouts, the Bank of Montreal is the most sustainable and the strongest amongst these three companies. Although when it comes to dividend payouts, the Royal Bank of Canada does make the best payments to its shareholders. But again, when we talk about payments, we do not necessarily want a company to just make payments on dividends. What we want to see is strong, sustainable, and stable growth of the company. And amongst these three, it seems that the Bank of Montreal provides such kind of model. Now, having said that, Bank of Montreal having the highest earnings per share recorded, as well as a good payout ratio, you have to also consider that with the rest of the other two banks, the Bank of Montreal has got the highest PE ratio, and therefore it seems that this company is more overvalued than the Royal Bank of Canada and the Bank of Nova Scotia. Now, you have come this far on this video here, and I thank you for that. As promised, we will create a dividend reinvestment calculator, which we will do for the three companies that we have discussed here. What we will do here is that we will consider a fixed amount of $5,000 that we will potentially invest. So with $5,000 with Bank of Nova Scotia, the initial number of shares that we are able to buy is 62.55. The stock price per share is 79.93. The annual dividend paid in the last year, which is 2020, is 2.84. The annual growth rate in the last 10 years is 5.6, as we have seen earlier in this video. The stock price annual growth rate is at 10%, and I have made it the same to make us consider apple to apple. And the number of years that we will invest this for is 10 years. If we create such information here, then the results with dividend reinvestment, the total value of our investment will grow to $17,188 in the next 10 years. Remember that your out of pocket here is $5,000. So your investment would grow 3.1 times in the next 10 years. The number of shares will grow to 82.91, and the dividends paid will amount to 2,825.46 with an annualized return of 13.14. This is the detail of the Bank of Nova Scotia. These are now the details of the Royal Bank of Canada Dividend Reinvestment Calculator. Right now, the initial stock price as I record this video of the Royal Bank of Canada is 131.71. So with these details, the total value of our investment will grow to 17,149.10, and the number of shares will grow to 50.20 with the dividends paid of 2,831.24, an annualized return of 13.12. These are now the details for the dividend reinvestment calculator for the Bank of Montreal. The total value of our investment, remember the out-of-pocket is the same with all these three companies, it's 5,000 Canadian dollars. With BMO, our investment would grow to 16,580.54 and the number of shares would be 49.98. Really, it would be almost 50 shares and the amount of dividends paid would be 2,388.71 with an annualized return of 12.74. In conclusion, if we compare all these companies here, it seems that the Royal Bank of Canada and the Bank of Nova Scotia do provide us the best benefit for our money. Remember, the annualized return for these two companies are almost the same. It's 13.12 for the Royal Bank of Canada and for the Bank of Nova Scotia, it's 13.14. Even the dividends paid is of very minimal difference. Now, what I need you to consider though is that with the Bank of Nova Scotia, the stock price is absolutely lesser than the Royal Bank of Canada. BNS sits at 79.93 and the Royal Bank of Canada sits at 131.71. So then that means we have got more shares with BNS in the future, which would sit at 82.91, and with the Royal Bank of Canada, it will only sit at 50.20 into the future. But also you have to consider that Bank of Nova Scotia is much more volatile when it comes to their dividend payouts. Even the dividend payout ratio of the Bank of Nova Scotia is much more higher than the Bank of the Royal Bank of Canada. In essence then, really for me personally, I would rather have consistency and stability of a company when it comes to the payout ratio and the payout on the dividend growth itself, considering that the payout ratio of the Royal Bank of Canada only sits at 43.9 and the Bank of Nova Scotia sits at 57.1%. It means that the Bank of Nova Scotia is a lot stretched when it comes to its payout responsibilities. And the Royal Bank of Canada has got more consistency and growth on its dividend payouts. Thank you very much indeed for watching this video. I hope that you gained value in this video and in my channel as a whole. And if you did gain value in this video, please like, share, and subscribe. And I will certainly see you, hopefully, in my next video. Thank you very much.